see the U.S. debt ceiling panning out? Could this lead to volatility in the near term?
I think it's likely to lead to volatility, but I suspect that most equity market participants will try to look through that volatility as long as confidence remains on the growth path for the global economy and the US economy. Ultimately, I think everybody knows that the answer has to be that the debt ceiling has to be raised and that the automatic so-called sequestration, the automatic cuts in spending, probably can't be allowed to happen exactly as they're programmed to do today. But I'm sure there's going to be a lot of jockeying around. I'm sure there's going to be a lot of negotiation, and it may go down to the wire. Of course, this happened once before in, I think, 95, 96. Larry Summers was Treasury Secretary then, and that actually led to a furloughing, a temporary shutting down of many of the apparatus of government in the United States and of employees. We certainly hope it won't go that far this time. That's not the expectation. And I do believe that the market will try to look through the volatility to what's really the inevitable final outcome.
Do you think investors are still risk averse?
I do. I know that it sounds a little odd to say that in the face of quite a strong rally in the fourth quarter of last year and into the first month of this year. But whenever we meet investors, whenever we talk to them, we don't detect the sort of very bullish animal spirits, if you like. We detect a very cautious view about the world and still a lot of concerns about the global economy and equity markets in general. So I think we're very, very far from reaching the level where we can say that people have got overconfident about the market, that they're too bullish and that caution has been thrown to the wind. I think we're a long way away from that.
Where do you see potential risks to equity returns in 2013?
Well, I guess the major risk is if we get consistently negative news about one of the major economies in the world. So the three key risks that we've highlighted, one or more of those could come back on the agenda. We don't expect that. The other concern for us, for equities, would be if we start seeing companies miss earnings targets, if we start seeing big across-the-board earnings misses, which would mean that our assumptions about the profitability of companies and probably most other people's assumptions about the profitability of companies would be overstated. And I think then you might see a pullback. But I don't think either of those is likely in 2013. I think there's quite a bit of momentum now in the global economy, and there's quite a bit of momentum in terms of corporate earnings as well. So we're not expecting either of those to unfold this year, but those are the risks.